ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right. Hi, everyone, and good morning. It is just past 11 a.m. Perth time or Singapore time, and welcome if you are revisiting the show. This is the Daily Currency Call presented by Forex Trading Asia, and welcome to everyone watching the live call as well, to the LCMS Trader Club members. And if you are watching this call on a delayed telecast with the YouTube channel, make sure you check out the Jindal Thai website to get involved in the LCMS Traders Club. It's well worth the investment to get involved. But just to start, a quick introduction as well, just to the people who are new to the show as well. We present this currency call every Monday to Friday at 11 a.m. GMT +8. It's episode 446. And the currencies we analyze are as follows. So Mondays are for Aussie and Kiwi, Tuesday, the Euro, Wednesday, the Pound, Thursday, Yen and Gold, and Friday, CAD and cryptocurrency. And the three of us, Jin, myself, Scott, and also Gimme, will be presenting the market economic updates, key support and resistance levels, trade ideas, and of course, much more. And for that, we do have Kim Hong discussing the Bank of Japan monetary policy minutes that were released earlier this morning. Jin is going through the pound, and I'll be going through the US dollar index as well. Finally, before we get into this episode, a disclaimer. Any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering into any trades. So we do have a little bit of a adjusted schedule. We've got Jindal Thai here, multi-million-dollar trader, presenting the pound analysis. For later today, we do have the GDP coming out for the pound. So over to you now, Jin.
All right, thanks for that, Scott. So changing things around a little bit now. Just before I do that, I'll give you all a little heads up, is that you're here today. You want to make sure that you're here tomorrow. You want to make sure that you're at the call tomorrow, because tomorrow will be the last currency call we have for the year. Not forever, just for the year. So tomorrow will be the last one. We will do the yen pairs and also CAD and maybe crypto if Scott feels like it. So we'll do yen, CAD, and crypto tomorrow. And then we'll take a short break in terms of the currency call until the 3rd of Jan. So if you are a club member, make sure you turn up tomorrow. It'll be the last currency call for the year. And if you are watching us on YouTube, well, make sure you subscribe so that you know when we get the next currency call up, you get a notification for that as well. With all that said, we are heading into the Christmas period, into the New Year's period, so not a lot of trades to be firing out. We did have a good trade on briefcase, on Forex briefcase yesterday, but you can see that the volume should be dropping a little bit, with markets being a little bit more erratic, markets being a little bit less volume in the markets. Hence that erratic and that big jumps towards the upside or the downside. With that said, looking at the news here, today being Wednesday, and with the pound dollar in focus, the final GDP number from the UK quarter on quarter at 3 p.m. GMT +8 to be released, looking like no change, 1.3%, previous 1.3% expected. Not a big change here, or no change expected, but at this point, this is last quarter. I think with the way the UK has been influenced by the new variants, we might see into next quarter something might be interesting. Good thing is that the government seems to have came out and said that they're not implementing any new restrictions because of this variant or this next wave. Later tonight at 9:30, we do have the US GDP number as well. Also no change at 2.1% expected quarter on quarter. Again, at this point, I think what we might see for the dollar is further consolidation, a bit of a spike towards the upside, but I still expect in general that consolidation, and then not much else after that. Following on from that, tomorrow, Thursday, we do have GDP numbers for the CAD. I'll tell you more about that tomorrow. And also some news, some US news, but not big price movers there. Monday, we're on a holiday. Tuesday, nothing again. Wednesday, get ready for your New Year's Eve party. And then it's all the way to Monday, where it's still a bank holiday in most countries. So this is the reason why we're taking a bit of a break on the currency call, because not a lot of directions to be projecting at that point. So looking at the news, looking at the charts here, pound dollar on the H4 time frame, what you could be looking for, I think we'll probably see that small move, not a big, not a tradable move, I would say, but that move back down towards that 1.3222 level, probably back towards this week's low point, about a 50-something pip move towards the downside. What you could be looking for, probably not on the H4 time frame, but on the H1 time frame, going to the H1, what you could be looking for is that short-term trade, 20 pip stop loss, maybe a 40 pip, 30, 40 pip take profit, or at the most, a 60 pip take profit towards the downside, a 20 pip to 60 pip, a 1:3 risk reward ratio towards the downside on the pound dollar. I think this would be a short-term trade, an H1 kind of trade, especially if this candle can close below 1.3250. If you can close below that point, you have a 20-30 pip stop loss for a 60 pip take profit, almost a 1:3 or 1:2 risk reward ratio towards the downside. Anticipating this downward move on the pound dollar would mean that the euro pound, as we talked about yesterday, I said it was going to consolidate and drop. It went straight down. We could see that push back up into this range again. So we might see it push back up into that 85.38 level, because pound dollar drops could push the euro pound towards the upside, especially given that we haven't seen much direction from the euro dollar. So quite straightforward in terms of the pound analysis, looking at that short-term H1, if you have to H4 trade towards the downside, still possible, but I think not big directions to come from the pound dollar. So straightforward with that. And that's also why I wanted to jump in first. Those of you who just jumped onto the call, make sure you turn up for tomorrow's call. Tomorrow's call will be the last currency call for the year. And then we'll be back on the 3rd of Jan, back like clockwork. With that, I'll pass it back to you, Scotty.
All right, thanks for that, Jin. And I will share the trade ideas shortly in the EchoFin platform as well. So next up, we do have Kim Hong here, currency strategist with LCMS Traders, and he'll just be going through the Bank of Japan monetary policy meeting minutes, just going through some of the details of that. So over to you now, Gimme.
All right, thank you, Scott. Okay, Bank of Japan monetary policy meeting minutes. I'm not sure how many of you will actually pay attention to this, but if you don't worry. You know why? Because this set of minutes is actually for the October 27 and 28 meeting, okay, as indicated here. And over here it says not to be released until 8:50 a.m. Japan Standard Time on Wednesday, December 22nd, which was actually earlier today. So why do I say that this minutes is not? Well, this minutes is pretty much stale, okay? Whatever has been covered in here is stale news, all right? So we won't actually pay attention to this at all, okay? Why do I say that? It's because of the most recent moves carried out by the Bank of Japan, okay? So prior to last Friday's monetary policy meeting, okay, basically what the Bank of Japan has been doing is to, held policy unchanged, yield curve control, everything remains the same. In fact, okay, the monetary policy statement, okay, is pretty much a copy and paste, okay, from month to month, okay, from meetings to meetings, okay. Over here, the guideline for assets purchase. What's this again? Okay, the ETFs and Japan Real Estate Investment Trust, the J-REITs, okay, they are being purchased at the upper limit. They have this upper limit of 12 trillion yen and 180 billion yen respectively, okay. And then they were also, they have been, okay, purchasing coupon payments and corporate bonds, okay, with an upper limit of 20 trillion yen, okay. And they will be doing so until March 2022. Okay, so basically no change in the statement prior to last Friday. Okay, so last Friday, like what I already covered recently. Okay, they actually extended the whole. There's this special. What do you call that again? Let me look at funding. Special funds supplying operations to facilitate financing in response to the novel coronavirus. Okay, it's actually a stimulus. Okay, it's a stimulus coming from the Bank of Japan. Okay, so it will actually be extended by 6 months until September 2022. Okay, so previously, which is like this, minutes, this set of minutes that we're looking at right now in October, right? They were actually planning to, well, the initial plan was to actually have this whole special funding program, okay, until probably like end of March 2022. Okay, so last Friday they decided to extend it because they find that more stimulus is required in some aspects of the Japanese economy. Okay, so that's the first change that they did. Then the second change that they carried out, okay, is the tapering of coupon payments and corporate bonds. All right, over here it says that remember this is back in October. Okay, it will be let's say it again. Okay, it will be purchased at up to 20 trillion yen in total until the end of March 2022. Okay, but last Friday, okay, the Bank of Japan actually mentioned that they will, okay, once March 2022 arrives, all right, they will actually tone down the amount of bond purchases under this CP and corporate bonds plan program. Okay, they will be running at the rate that is of pre-pandemic level, okay, which is about 2 trillion yen for coupon payments, CP, okay, and 3 trillion yen for corporate bonds. So it's actually a total of 5 trillion yen, okay, as opposed to the current 20 trillion yen. Hence, this is actually a tapering, a good one, okay? So that's the only two difference that we hear from the Bank of Japan last Friday, okay? So right after the changes being made, yeah, anything that happens before this meeting, like the current set of minutes that we're looking at right now for the month of October, okay, is pretty much it's no longer valid anymore, I would say. Okay, it's no longer updated. In fact, I can't remember if they actually met in November. Okay, if they do, the next set of minutes that's going to be released for the meeting in November, it's pretty much pointless as well. Okay, it's pretty much pointless because we already have new updates coming in from the Bank of Japan. Okay, so with that, nonetheless, all right, I'm still going to bring your attention to the economic data release that's coming up on Friday. Okay, Christmas Eve. Okay, so the Japanese National Core CPI year on year will be released. Okay, Traders Club members, I've already mentioned on Monday night. Okay, unlikely there's going to be any price movements, okay, when this set of CPI data is going to be released, okay. So why are we still going to be paying attention to this? Is because inflation in Japan has been at very, very low level for the past, like the last time it actually hits the 2% target was back in 2015 May, okay. So the central bank governor Kuroda has repeatedly said many times already, unless inflation in Japan were to hit 2%, okay, at least 2% sustainably, otherwise the central bank will not be hiking interest rates, okay, meaning it will stay at the all-time low of negative 0.1%, okay, which is why we want to pay attention to the core CPI released the national core CPI release, okay, the annual data, all right? Not to say that it's going to jump up to 1% or 2%, like, during the next two releases, okay? I mean, like I mentioned on Monday, given this global rise in inflation, okay, in US, in UK, and many other major economies, we are not seeing a strong rise in inflation in Japan, okay? I mean, yes, okay, if you previously, back in earlier this year, okay, we see inflation in Japan to run as low as -1%. If you were to consider -1% to the current 0% to be a great improvement, then okay, fine, that's a great improvement, okay, but it's still a long way to Kuroda's 2% target, okay, and you can see for the past 6 years, the highest it actually went was coming close, not even 1%, okay, coming close to 1%, probably at 0.9 or 0.8%, okay, and annual inflation, okay. So yeah, unlikely it's going to shoot up to 1% anytime soon, but still, see, the previous release was 0.1, okay, and it's expected to rise to 0.4, so 0.3 climb, all right. It's probably going to be the highest, okay. Let me see if it's going to be the highest. Yes, it's going to be the highest level probably since the pandemic. Yeah, because the pandemic struck in May. Okay, COVID was actually declared a global pandemic in in March. All right, and then you can see over here the April data release, which is actually for the month of May 2020, was 0.4%. Okay, and then ever since then it fall, then it come back up. So this time around, okay, if inflation were to rise to 0.4%, it's actually good news for Japan, okay? But will it actually have an impact on the Japanese yen? Highly unlikely, okay? Because, the market is too seasoned to Japan having an ultra low inflation, okay? And everyone knows that it is not going to just hike. The inflation is not just going to spike up just like that, right? Which is why there's going to be little impact on price movements for the Japanese yen, okay? And then if you were to look like next Tuesday, okay, there's this BOJ core CPI inflation as well. I won't pay too much attention to it, okay? I will pay more attention to the national core CPI, okay, as a more, I would say, reliable measure of inflation in Japan, because, okay, if you were to look at the data collection for this Bank of Japan's data collection system, okay, it actually started only back in November 2015, okay, as opposed to the Japan's statistics department, okay, statistics bureau data collection, which actually started way before, okay, it's actually back in January 2002, okay, so we almost have like a 2 decades worth of data, all right. So nonetheless, all right, both sets of data, it's unlikely going to have any much deviation or differ much, okay, in any sense, all right. So yeah, I'll pay attention to the national core CPI data, and if you are looking for trading opportunities, highly unlikely, and somewhere it's Christmas Eve, all right. So nobody's going to trade. Traders are going to be on leave and things like that. So the purpose we are just going to be paying attention to is just so that we keep an eye on inflation, okay? Let's just follow what Kuroda does on a monthly basis, okay? We just keep an eye on the Japanese inflation to see if it's making any improvements. Hopefully it is, okay? Otherwise, the Japanese is going to keep interest rate unchanged at the all-time low of -0.1, okay? So that's all I have to share about the Japanese monetary policy meeting minutes. Any questions for the minutes? No questions. Okay, so if that's the case, I will hand it back to Scott.
All right, thanks for that, Kimmy. And I've just got the US dollar index to finish up here, guys. So look, frankly, it wasn't a particularly eventful session with the US dollar. We did see equities actually move higher. There was a little bit of chatter about Omicron and some vaccinations having some success. There was something about the US Army actually developing something that can combat all the variations, which I'm, frankly, the market seemed to like that. And there were a few other, bullish sentiment factors out there as well. 3 days in a row of selling and now we did see a bit of a dip buy. Although in the Australian market right now, it's pretty flat. I mean, it is down a little bit, but it's very jittery, I would call it. So, you know, right now, this time of day, US dollar, as we've seen, is pretty flat. We've got, you know, the trading range is between around 96.30 to 96.50. And, you know, with what we've discussed with the economic news that is around, there's not a lot of factors, but just a couple of points to consider if you are, you know, around the charts, and even if it's just for a learning experience as well, if you just sort of monitor things. So for later today, we do have the core, for later today, we do have the CB consumer confidence. That's, you know, a point of interest. It is expected to be higher than the previous reading. And then we've also got the GDP quarter on quarter as well. So 2.1% expected. So, you know, if things are a little bit higher than expected, that could help things. We also have the pound GDP as well. And then for Thursday, we've got the USD, we've got the core PCE price index month on month, 0.4 expected. We've also got the durable goods orders as well, coming in at 1.9, and then previous months was negative 0.4. And then personal spending and income, also I'll be sort of looking at that. But again, just a lot of market participants are not here. So it can really result in, you know, price might move 20 pips or so, and then it can quickly evaporate and reverse. So be a little mindful of that with holding positions. You've got to, you know, probably just take some profits where you can and, you know, wind down for the holidays. But that's pretty much it for the news there. So with the US dollar, just see how it reacts to today's news, and, you know, go from there. I mean, upside makes more sense as well. So ideally we settle here and we might make a break, you know, over 96.50, but then again, it's limited upside. You'd really want to see equities pull back a little as well. So that just means, unfortunately, you've got to wait, you know, 10:30 GMT plus 8 is when equity markets open in the US. So if you're willing to do that, then, you know, or you could see a run up earlier than that. And then I would just go with that. And then again, settle the positions quickly. Don't sort of let them run, because you've got a lot of factors that can quickly change as well. So that would be something to take note of. But that is the US dollar index there, everyone. And I have shared the link there for the Forex Briefcase Managed account. And remember, guys, with the disclaimer too, with the trade ideas shared, just pay attention to making sure you ask any questions if you've got any issues with any positions you're in or want some ideas as well. But that is it, guys. So thank you so much. Hope to join you all as well for tomorrow. We've got a jam-packed episode with a few things to discuss, but that is today's episode. Thanks for watching, everyone. Have a great day.